You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Hi there. Welcome to Talking Real Money. I'm Don McDonald, along with a guy that anchors probably should just kick out of the studio.
I think they'd like to.
During the top of the hour.
They'd like to. Yeah, I know.
Yeah. You wonder why Tammy won't let you in.
Exactly.
Yeah, exactly. Mm-hmm. See? It's your fault. It's all your fault. You got to quit joking around with the anchors during the news.
I know.
He's so funny.
Yeah.
All right. Hey, we are here to do something really important. And we truly believe what we do is important. We want to educate you about money, and particularly about the one thing that you do badly, if you're like most Americans: invest. Most people invest horribly. That has been our experience after decades of doing this kind of stuff for folks.
They have too
Terrible.
many. You have too many accounts. You have too many ideas. People buy ideas. I gotta get into Tesla, or they gotta get into cannabis stocks, or I gotta get into Bitcoin, that kind of stuff. They buy an idea. They don't have a strategy generally. So yeah, we're helping you to fix some of those wrongs. Get it right.
That's what we want to do.
Yeah.
Call us. It's easy as cake. Easy as cake. It is easy as cake. What movie is that from?
I
think
have
that was
no
from
idea. I only watch movies once, so I don't really remember the lines.
Yeah, no, I only watched them once. That's why I can't remember. I think it was 2010, the sequel to 2001. It is easy as cake because it was Russian who called. I'm going to say Russian. Easy as cake.
Kakio imya, kind of that kind of stuff. Yeah, got it.
Yeah, that was good. If you just said something, I'm impressed.
I did. I took Russian in high school.
You're like Pete Buttigieg.
Can I say that I took Russian in high school? Because I'll probably be escorted out.
Did you really?
I did. Yeah.
Do you know Pete Buttigieg speaks 7 languages?
Wow. Did not know that.
Fluently?
Is this an advertisement for Mr.
No,
Buttigieg?
I just was shocked. I heard it. My wife was listening to something, and I went, really? They said he learned Norwegian to read a book.
He's also one of the few candidates, the only candidate who lives in a house that's worth less than $250,000, which I read yesterday.
That cracked me up.
Yeah.
$225,000 house
in beautiful South Bend, Indiana. Yeah, that he bought for $130,000. Good investment. A decade
almost
ago.
Doubled his money.
I know. So good for him.
855. This is an important number. You need to write this down somewhere so you have it close by. 855-935-TALK. 855-935-8255. You can call live during our show and ask questions and get a reward.
You get 2 tickets to Retire Meet, which is coming up 2 weeks from today. You're
1 or 2,
there.
depending on how many you want.
That's true. You don't have to take 2.
But please don't take 2 if you don't need to. We're going to sell out, so
we always do.
Go get them. And the other thing you get is an answer, and an honest answer, where we're not going to try and sell you something except tickets to Retire Meet. Oh, no, we're giving those away. Can't even say we're selling Retire Meet tickets to you because you're getting them for nothing. So call 855-935-TALK, 855-935-8255. But you can also call that number 24 hours a day, 7 days a week, and I'll answer the questions on the podcast. Jonathan, thanks for calling.
Hi, Jonathan. Thanks for hanging in there. How can we help you?
Yes, sir. Nice to talk to both of you guys. Hey, I have an investment with it's a mutual fund, I guess. It's a Investco Oppenheimer Main Street Fund, and I got it for my son, but he's now 22 or so, and so I can't do anything with it. But once he turned 22, I was putting the money in, and it looked like they stopped.
Is it a uniform gift to minors, or is it, how was the account titled? Is it in your name or his name or both names?
At this point now, it just comes in his name. After he turned 22, they said it rolled.
Okay,
into
so
his,
so it was a uniform gift to minors account, which became his property at the age of majority.
So now he owns the money. Dad. That's
Yeah.
okay. Yep.
Yeah, that's understandable. But I'm trying to see why there was no additions, because it was an automatic withdrawal up until a point, and it looked like they didn't take anything out after that. After he turned 22. Why would
you were having money taken out of a checking account of yours to fund it?
Yes.
Yeah. Well, you did this through a stockbroker, I would guess, through like Ed Jones or Pardon me?
It was the credit union.
Credit union.
Yeah,
Okay. It was a broker in a bank.
Yep.
Broker in a bank. They probably stopped that automatic contribution at that age. That would be my guess, but I would ask the broker in the credit union. However, there may be something you could do that's a lot better. I would stop funding that thing anyway because I don't even like the fund. You paid 5.5% every time you put money in, and the expenses are 0.85% a year.
Kind of spendy.
That's expensive.
Yeah, for both.
Okay.
Does your son have a job, earned income?
No, he's still in school.
He's in school. Does he
all right.
have any earned income at all?
Negative. Yeah.
Negative. Oh well, then
Yeah.
you can fund something at Vanguard for him going forward. You could just do it in his name.
He could just
and when
move
he
the
gets
money.
move the money over. You could have your son move it to Vanguard. He's probably going to do a lot better long term. But what he can't, once he has some earned income, start giving him money for a Roth IRA going forward. That's going to do a lot for him. Thanks for the call.
Tom and Don are talking real money.
Do you need a little help with your investments? Set up a free, no-obligation appointment with one of our advisors at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Only because it's really darn important. Give us a call, 855-935-TALK, 855-935-8255. As I mentioned at the beginning of the show, I truly believe that the vast majority of people in America and around the world, for that matter, who invest don't do it right. They do it badly. And that applies to people who are at the lower income brackets or at the higher income brackets. As a matter of fact, the people at the higher income brackets may be even worse investors than people in the lower income brackets because they honestly believe that because they're wealthier, because they're executives with big companies, because they're sports stars and celebrities, they believe that there are special investments for them because, well, they're special.
And some of that is private equity, right? The opportunity to invest in companies before us little people like you and I, Don, can invest in them in index-type mutual funds because they aren't available. These are companies that have not gone public. They're still private equity, private investments, places that are, as you said, special for special people.
And they're private placements, so regular people can't have them.
Yeah,
so they must be better.
Yeah, and so here's the rub, okay? Because you and I can't get into them, you want to. Right? The grass is truly greener. You got to be making more money. There's some secret sauce here that allows you to be invested in Facebook before it goes public. Well, that one worked out. But there's all kinds, by the way, of companies that you didn't want to invest in. So Vanguard has decided, I hate this, actually. I hated the headline. I hate the whole thing. Vanguard has decided that they want to make that type of investment, well, by the way, not to you and I yet, but they're going to start a private equity fund only for institutional or larger investors. They have not announced how big your account has to be before you can invest. And here's the other part. They're going to have a mutual fund or some type of investment that's going to pool that money and allow you to invest in private equity. They have not announced how much it's going to cost for you to invest in there because generally private investments, private equity, if you will, is more expensive place to invest.
Yeah, and here's the thing. I did a little. Well, okay, let me take a big step back. I'm angry at Vanguard. I really am because Vanguard was supposed to be, and has always been actually under the guidance of John Bogle, was supposed to be a firm that kept it simple, that kept it simple and that kept it inexpensive. But now Vanguard feels like they've got to be all things to all people, even though they manage trillions of dollars because their big clients said, well, why don't you offer private equity? Instead of telling them we don't offer private equity because the data shows that it doesn't work.
Well, I mean, that's the other part.
They decided to pander.
Yeah, I think they are pandering. And so we went back and I went back and did some of the reading. Larry Swedroe wrote a great paper about this. There's been all kinds of studies. Our friend Mark Hebner at IFA has done some work about how much money, how special really are those investments. By the way, Washington State's Retirement Investment Board holds some things in private equity or hedge funds, similar types of investments that are not public, right? You're not investing in capital markets that all of us can invest in. It turns out that no, the returns, there's nothing special. And remember, for every Facebook, there's about 50 companies that did not make it, that did not get to the public market and get cashed out. It's a huge number.
And you didn't know it, and you didn't know about them because they didn't make it.
Yeah, they don't.
So you're not going to hear those stories.
Yeah, and so there's been studies. Larry, as I mentioned, Larry's written this paper about. Well, by the way, first of all, they always want to compare everything to the S&P 500. Did you make more in private equity than in the S&P 500? That is a poor comparison. Because the S&P 500 is 500 very large companies that are traded every day. So there's liquidity you give up. There's expense that is far higher to be invested in private equity, generally hedge fund type of expenses. Barton Biggs had a great quote about as soon as you add in those expenses, you're in for eventual performance disappointment. No, and so the real better benchmark is tiny companies, right? Micro-cap type.
Small caps and micro-caps. Yeah, you're absolutely right. Micro-cap would be the only fair comparison.
Exactly, because those are really tiny firms that have market valuations in the tens of millions. Really, really, really small.
But are publicly traded.
Exactly. You can get your money tomorrow. You can't do that in private equity. So when you look at that comparison, it really is no difference in performance between owning widely diversified microcaps and being in private equity. So don't feel like you're missing out. Don't run out and try to get into Vanguard's new fund launch in private equity. It's completely unnecessary in my book.
And let me just add this. I did a little research on the company that they're working with. Neither of them would comment on what the fees, what the charges, what the costs will be on this new offering that is going to be managed by a company called Harbor Vest Partners. Well, I checked out Harbor Vest Partners, and while they are not a hedge fund typical fee structure, they only work with other organizations like a Vanguard to manage money. They charge 1% per year plus 10% of profits up to a double and 20% of profits after a double.
Does that sound like a good deal?
Not to me.
No, I don't think so.
Not to me. 855-935-TALK is our number, 855-935-8255. Let's start off with Pat. We may have to carry her over the break, but Pat, welcome to Talking Real Money.
Hi. I want to thank you guys for all the good information you give out there. People think I'm a financial genius because I listen to you.
That is very kind. Yeah, that you're making a very wise choice there.
I agree. My question is, my husband turned 70 last year and 70 and a half. We did his RMD for 2019. Does he have to do an RMD for 2020 with the new Secure Act? Because he'll be under 72.
Yeah, he still has to. If you started it, once you hit that benchmark prior to this year, you have to keep taking them. There's no exception.
Okay.
It's only for people that didn't hit it as of 12/31/2019.
I thought we didn't have to do it this year.
Sorry.
I was so excited when I heard about the Secure. I said I don't have to deal with it this year, but we do.
Yeah.
Okay.
Yeah.
All right.
And because once you start, it's an annual distribution, and there's a formula you have to just follow. And
by the way, they haven't come out with the new table for the formula. It's pretty interesting for waiting till 72.
Really?
Because I think they're going to have to
surprise
increase.
you?
Oh yeah, the government's not prepared.
It's the government.
Yeah, I think they're going to have to up the amount a bit because, as you know, at 70 and a half, it was like 3.6%, went up a little bit over time. It's going to be higher in 72.
Oh, I'm guessing. I'm guessing they're going to stick with the same expectancy tables.
And my prediction is eventually it'll all be Roth. You'll just have to pay the tax to put the money in. That's the big change eventually.
Yeah, but predicting stuff is dangerous. We don't do that. 855, that's our
Tom
number.
and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information, talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
I was reading one of the comments at the Wall Street Journal about that, the Vanguard decision to go into private equity, and one guy commented, he says, Vanguard under John Bogle would not have touched something like this.
Yeah, it's very speculative. I mean, because that's what it is. You're hoping something works out. When you invest in companies that have been around for at least a while, and by the way, they're publicly traded companies that have wild. I mean, look at Tesla. It went from 300 to 900 in like 10 trading days. Crazy. Individual companies
That
are
was
always
nuts.
risky. Private equity is riskier than capital markets. It has to be. There'd be no other reason to invest in it.
Right, for the potentially
Right,
higher
exactly,
return. But a bunch of that potentially higher return gets eaten up by those higher fees.
The high fees, the illiquidity, if you need your money. There is no reason for Vanguard to do this other than FOMO. That's it. There can't be any other reason.
FOMO?
Fear of missing out.
Oh, FOMO.
Yeah,
Fear of missing out.
You saw my
Yeah.
mouth, apparently. Yeah, that's a different
Yeah.
FOMO. No, there is no
FOMO
other
at the
reason.
mouth.
Yeah, there's no other reason. That's the only reason they're doing it. It's sad.
855-935-TALK. That's our phone number. Tex, you're next. Welcome to Talking Real Money.
Hey,
Hi,
Tex.
gentlemen. Thanks for having me.
You bet.
Question is around retirement. I'm on track to finish working in 2 or 3 years, but the future of the market looks pretty good, and so my question is about the wisdom of going from conservative to a little bit more aggressive at this stage.
But wait, I want to make sure I understand your statement. The market looks good into the future. Tell us more about that.
Well, I just looking at the trend of the stock market for the last year plus, and the way it's been going. I think I have a little bit of FOMO, like you were saying.
That's exactly
Okay, yeah.
what you have.
Yeah.
You recognized your own disease. Congratulations. You're doing what everybody does. It is this straight line thinking. We think because it did this and it's
Recency.
been doing this,
Yeah.
we believe it will continue to do that. And that works both ways. When the market has been declining, people think it will never stop declining, and they get scared and they don't invest. And sometimes not for years. There are people today who got out at the end of 2008 or early 2009 and have not put any money back in the market for that entire 11-year period.
And let me tell you what I think you should do, Tex, okay? Here's instead what I would do. I would figure out what rate of return I need to finance my retirement. Is it 5% a year, 6% in growth on your portfolio? I would then build the portfolio that way between stocks and bonds, looking back to the 1920s in type returns. Build the portfolio that way. It has nothing to do with what the next 2 or 3 years, because frankly, no one predicted the markets were going to make 31%, or U.S. large are going to make 31%. Nobody did last year.
Nobody.
And by the way, if I was a predictor, and Don won't let me predict because he'll beat me.
No.
I would
Stop
say
it.
stock returns would be less the next few years because they've had such a great 10-year run. That would be my prediction.
Oh, you mean reversion to the mean kind of
That would be
thinking.
my take, but again, it might be a double next year. I really don't know. But I would always say the portfolio should be about me, not about the market. What rate of return do I need?
And how much risk can I truly
That's true.
stand? How much volatility can I truly stand? Go to TalkingRealMoney.com. Take the free risk quiz. There's no obligation. Nobody will call you. Nobody will bug you. Ask anyone. It's really free and easy, and people like it. Go take that. Determine how much return you need. Build a portfolio based on that. Make sure it's globally diversified, Tex. Globally diversified, because we don't know which market's going to go up or down in the future.
And you know exactly these kind of questions we answer for you at Retire Meet 2 weeks from today in Bellevue, morning session, afternoon. All kinds of great speakers: Apollo Lupescu, Paul Merriman, Don McDonald. It doesn't end there.
I'll be there.
I can't remember the others, but they're all good. You learn this type of thing, and you learn it in 4 hours. You put that retirement together, you got the plan, and then you're off and running. Congratulations on retiring in a couple of years.
And you get the Better Retirement Guidebook for free.
Yeah.
That alone is worth the $10 you're going to spend if you use the discount code FLASH at retiremeet.com. You got to use the discount code FLASH and save $10. Retiremeet.com.
Tom and Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at talkingrealmoney.com.
Reality radio for a really great future. We're talking real money.
Welcome back. I'm Don. That's Tom. This is money. It's important. You need it. You live on it. It is the fuel that keeps you going, and it is something you are going to need to think about and deal with if you want to eventually stop working and enjoy those last several, and by the way, those last several years of your life. If you make it to 65, the odds are you're going into your 80s. You're going to do another 20 more.
Yeah, the key around retirement, too, by the way, it's not just as simple as saving and investing, obviously, because there's a lot of decisions to be made about Social Security and pensions, how to provide the income in a tax-efficient manner, how many years you want to. By the way, I would keep working for a long time. I mean, I'm committed. We're going to tell our clients next weekend I'm going to work till 70.
You and I, we have really wonderful, fulfilling jobs.
Indeed.
I mean, really, we do. We're not out there in the rain digging a ditch.
That's true. Or a lot of other things, building planes.
In a coal mine or building planes. I mean, it's hard work. These guys work.
Yeah, I agree. And
a lot of people get to the point in life where they go, I'm 65, I'm 66, I'm 67. Even if I love my job, it's breaking my back. It is really hard. I have got to quit. And you need to have more than Social Security because let me tell you, Social Security ain't going to cut it.
The average right now, the average Social Security benefit is about $1,300 a month. What will that buy you in Seattle? Not much.
It won't get you an apartment in Seattle Metro.
You will be able to buy Pete Buttigieg's house, though.
Oh, if you lived in Terre Haute, Indiana,
South
or wherever, South Bend. It's South Bend.
By the way, there's another guy running for president. So Pete's house
is... There's more than one guy running?
Pete's house...
I missed that.
Pete's house is worth $250,000, roughly.
Roughly, yeah.
There's a guy that was the mayor of New York. Do you know what his house is worth? This is all in the Wall Street Journal yesterday.
Which one?
Well, the one in New York.
The one in New York. Oh, he's on the Upper East Side or someplace, isn't he?
You know what that was worth?
Yeah, let me tell you. My mom has an apartment on the Upper East Side.
Yeah, you know the cost for that.
And it's nothing special.
Yeah.
So if he's on the Upper East Side in a Bloomberg kind of thing,
how much?
It's got to be in the $40 million range.
Oh, that's close. $50 million. So how much more is his house worth than Pete's?
49. No, it's a lot more.
No. I was saying on a percentage basis.
49,700,000. Yeah, it's a lot.
It's a lot. Yeah. So anyway, we're trying to talk about retirement, though.
And I bet, there's something important in this there's a message hidden in here.
I'm waiting.
There is a message. One of the things, there are a lot of things that go into, and this is one of the reasons why we created RetireMeet, because more than just investing goes into retirement. There are a lot of other aspects. And one of the aspects that I've thought a lot about in my life, a ton, is where do I want to live in retirement?
Exactly.
And to live both comfortably, enjoyably, and affordably.
And you've already moved to your retirement place.
Yeah, absolutely. Yeah. Well, we haven't moved yet. We're in the process of doing that.
Let's not go
it's
there.
It's kind of slow.
Okay.
I'll give you a hint. It is not in Indiana because that would not be my first choice.
No way.
But
you are in a place where they play a lot of banjos, I think, right?
Oh yeah.
And you hear the crickets.
Yeah, as a matter of fact, it's like on the Bluegrass Trail or something. There's some sort of a music trail because bluegrass music, by the way, bluegrass music originated just 10 miles down the road from my house.
Wow. I mean, this is an important part of retirement, figuring out where you want to be. I mean, I want to be in my house the rest of my life. I love my house. I love where I live. I'd never leave if I could.
But that's you.
I know.
You are really.
You're not supposed to use messages. That's what my ex-wife told me.
This is only meant. Oh yeah. Well, I'm going to pay attention to that. This is meant with the greatest affection. You are Mr. Rut. You get in your rut and you love your ruts.
It works.
I love my rut.
I know.
Please do not take me out of my comfort zone. No, I don't like leaving my comfort zone.
Yeah, I had to go to Seattle yesterday to buy some new soccer boots. My son was like, "You're just horrible at this," because I had to go to a different
buy some
place.
New socks?
Soccer boots, baby, boots.
I thought you said
shoes,
socks.
Cleats. We
Okay,
call 'em boots.
soccer shoes.
Yeah.
You can buy those online now.
I know, and I should have because I bought them and they're too small. Anyway.
Oh, that's good.
Yeah.
All righty. Well, here you go. Another lesson from Tom. I don't know what it is, but there's a lesson. 855-935-TALK's the number.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
855-935-TALK. I want you to remember that number. Keep it close at hand, because not only can you call our show when it's on live Saturdays from noon to 2 Pacific, 3 to 5 Eastern, but you can call us 24 hours a day, 7 days a week, and ask questions on that line, and then I answer them during the Talking Real Money podcast. Because we have more than just this show.
Yeah.
We have the Talking Real Money podcast, which, by the way, on Friday's podcast, Tom somehow, and I'm still, I listened to it a couple of times.
Yeah.
And I was impressed. I was truly impressed.
How come?
With how you managed to take an Instant Pot.
Yeah, I love that thing.
And turn it into a financial story.
I know. It was a bit of a reach. By the way, I got to publicly thank you for getting it.
You did it. You pulled it off.
You got me the Instant. I love that thing. It's fantastic.
Have you cooked more in it?
No, just the one dish so far.
Just
but my
the chili
wife,
that everybody loved?
Everybody loved the chili. Yes, fantastic. So I'm going to use it more.
I am telling you, the little while ago, I thought, wouldn't it be cool if you could just put all the stuff for one meal, like chicken and rice and vegetables and stuff, into the Instant Pot? But I thought to myself, that won't work.
Yeah.
They all cook at different times. No, it worked. I threw in brown rice and carrots and chicken, and it was frozen. The chicken was frozen.
And about 30 seconds later, you got a nice... I mean, it's astounding how quick. Scares me, actually, a little bit, all the pressure. So anyway, yeah, thank you for that. So I was talking about how in a portfolio, you got to put a smidge of this and a little bit, and most people don't understand that all those things have, if you do it right, have added a little bit of return and actually reduced how much the portfolio goes up and down. So
reduce the pressure. So then it slow cooks at the lower pressure, and that's where it was like going. It was like, well, it's even though it's an Instant Pot, it's really fast. Cook it slowly.
Yeah, I know. It's okay.
But no, I gave you credit for a great stretch. A great stretch.
Appreciate it.
But what the point was, you could go listen to our podcast and get questions answered on our podcast.
You do that every day.
Yeah, so go check it out at TalkingRealMoney.com. Also check out all the other stuff we've got there. Tons of great information for you. And we also you can find out more about RetireMeet there and at RetireMeet.com. We want to see you there. We really believe, and this is the reason we started RetireMeet 6 years ago, that there is so much more you need to know than even though we're an investment. Tom and I run an investment advisory firm. We know there's a lot more to planning for retirement. It can't just be investments. You have to think about how you're going to live and how the law is going to affect things that you do. So we try to bring all these people together to give you a better idea of what you're going to need to do.
Well, we didn't try to. We did. We did.
Actually,
we
are.
Did. I mean, again,
we did a lot better than year one.
Yeah,
yes,
we
did.
And I mentioned a few of the names. Paul Merriman. I mean, he is a national expert. Lucky for us, he lives here in the Seattle area. Herb Weisbaum, you already know that name. Rick Gregorich, you know that name because he has your partner-in-law. But here's the other two that you may not know the names, but the topics are absolutely critical. Medicare, Kevin Peterson, because once you get into retirement, you got to figure out health care. Medicare is way more complicated than
the last time he spoke, I went, really? Yeah. I have got, because I'm Medicare eligible in like a year and a half, little less than a year and a half. And I'm thinking, I need to start planning now to figure out all the Part B's, C's, D's, E's,
Yeah.
F's, and G's.
Exactly. And then Barbara
Wow.
Devereaux, who spent 20-plus years in long-term care insurance, speaks on that topic. So there's a lot of topics. We give you all of this in a 4-hour either morning or afternoon session. And the idea is you walk out and sort of are educated about all of this in a way that gets you going the right way for retirement.
You forgot our most important guest, who, by the way, at every previous retire meet he's attended, has been the hottest ticket. When we used to break out,
Yeah.
I mean, he was standing room only crowds because he's such a compelling speaker.
He is.
You probably never heard of him because he's not famous, but he's brilliant.
Apollo Lupescu, you're talking about, of course.
Apollo Lupescu.
Yeah, he is a speaker. He's affiliated with Dimensional Funds, which is a mutual fund family that we like and we utilize for our clients. And he is a PhD in all this, but he knows how to talk to all of us in a way that you're going to understand it.
Well, he worked for, back in the day, he worked for the Department of State and the White House. And at Dimensional, they call him, get this, I love this name, the Secretary of Explaining Stuff.
Is that that's the title, really?
No, they just, that's their
okay.
cute little nickname
Which
for
is-
him because
yeah.
it's true. It's what he's good at. Mm-hmm. He explains stuff in such a way you think, oh, great, a professor, a PhD. Oh, he's going to speak right over my head.
No, doesn't do that. No, he knows how to
And he
explain
doesn't
these
speak
concepts.
down to you. He
No.
doesn't speak below you. He speaks right to you.
And you
I
can
really
ask him,
like that about Apollo.
and you can ask him anything at all about water polo, and he'll know it.
All I know about water polo is, one, it's in water, and two, there's a ball involved.
And you can't stand up.
Oh, it's deep water, huh?
You're not it's against the rules, I'll put it that way, to stand up. I don't know if they're always, because anyway, it's
Well, here's what would happen to me in that circumstance then.
yes.
It would be water death.
It'd be, what didn't they start with 6
we're
players?
done.
Wait, there's
Wouldn't we have
5.
another player out
Yeah,
there?
that's all right, yeah.
Oh, check out
Yeah.
the bottom of the pool.
But he's
Yeah, that
competed
would
at
be
the
me.
highest levels in water, and to see him, you'd say, yeah, it makes sense. So so they're all there for you the morning or afternoon. Go to Retire Meet. That's EE.com. And,
that's right.
Don't do
it's
the
not
other.
retiremeat.com.
We're not feeding
We're
you to a
not
group
serving.
of brokers or
This
insurance
is a
agents.
purely vegan event.
Exactly. So, and you'll love it. It's at the West in Bellevue this year. It's February 22nd, and you can get tickets on sale today. So do it.
Yeah, use the discount code FLASH. You get $10 off. One of the reasons I love, we used to do it at the Maidenbower, but you had to pay for parking.
I know.
And downstairs in the Westin or next door at Bellevue Collection, you can park downstairs for free on Saturday. And so you're really just paying for the darn ticket, which makes it a really good deal.
Yeah, you're never going to, I'll make this claim, you'll never get that group of experts and that much information in one place in one time. Hasn't been that much knowledge in one room since Thomas Jefferson dined alone. I mean, it's just that good. So
That's pretty good. And by the way, over the years, we have been honing our guest experience, too. I mean, we've had a lot of people who've come and gone over the years.
True.
And what our goal has been all the way along is to find those who best educate about their topics.
We've gotten rid of people that came there and sold you something. That's true.
Right.
Yeah.
That's what I'm trying to, think that's the point I'm trying to make. You are not going to get hard sold by anybody.
No.
Anytime during the course of this event. It is educational. So
Saturday.
Educational.
Thank you. Saturday
When
the
is it?
22nd. 2 weeks from today. We got to get going. I think it's 2 weeks from today. That's right.
It's 2 weeks from today.
Yeah.
We usually, the first one we had on Valentine's
We
Day,
did.
but this will be close.
Yeah. So join us.
So go get your tickets.
Yeah.
Yeah.
Do it.
We truly love to see you there. Grab your tickets. And remember, if you have questions throughout your life, throughout the week, you can go to talkingrealmoney.com and send them in to us, because these questions can come up at any time. Or you can call us 24 hours a day at 855-935-TALK, 855-935-8255. Just leave the question and then listen to the answer on our podcast, which are at talkingrealmoney.com. That's where we got everything.
Tom and Don are talking real money.
Would you like to talk to a real investment advisor for free? Set up an appointment at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And this is my last opportunity to remind you that if you want to save money at Retire Meet, you've got to go get your tickets now, because our sale ends on Sunday night. So save $10 per ticket by using the discount code FLASH at retiremeet.com. That's retiremeet.com. When you get to the order page where you start to pick your tickets, put the code in there at retiremeet.com, discount code FLASH.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.